Hello, 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 hello. Hi all. Test, 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 test. Okay. Hi all and welcome, welcome, welcome to another edition of TraderCast YouTube Live. My name is Phil. I'll be your presenter today. We'll go through this fast and furious. If you are looking for a community of traders and you might want to experience what we're doing here right now, but for longer and in more detail, covering more fundamentals, talking about some key trading levels based on not just technicals but also the key economic data releases, check out TraderCast. If you're brand new and you're looking to find a good place to learn how to trade, check out My Trading Skills, mytradingskills.com. There's plenty of free courses where you can just get a flavor of how I teach, and if you like it, stick around. It's not a problem at all. I had the privilege of talking in front of thousands of people over the last 10 years in front of various different industry events, and I had the privilege of teaching some of them how to trade. Some of them were brand new, never traded before, and they needed a step-by-step approach to trading, beginner's guide. Some of them were intermediate and more experienced, and they needed the help with a specific area of their trading, like maybe risk management or psychology or stuff like that. So big disclaimer, I'll be showing you some live trades. I'll be telling you about what I'm looking for at the moment. I've literally just opened a trade before I went online. That's why I'm a couple of minutes later than normal. I just went long S&P and long FTSE. I'll talk to you about all of that. But basically, these are my experiences, not advice. This is what I think should be a practical application and approach to trend following, price action trading by somebody who is fairly new. A novice trader should be able to do this, in my opinion. So basically a practical application, not advice. Now some open trades and recap on what I had open from yesterday. I was long WTI and I finally closed the last segment of this position at 87.95. If you remember, I was looking at 88. 88 was my ultimate kind of goal. It went through that a little bit and then reversed, and I decided to get out. So I'm flat out. I have a limit order for crude oil, and I'll talk to you about that in more detail. I believe it's at 84.50. That's what I would like to get in again, but I'll talk to you about it in a minute. I was also long gold from 1800. This is just before or shortly after US markets opened, around that time, and I got stopped out at 1780. So this was a losing trade, but a level which reacted in the past, and I was happy to take this trade. It was logical. I decided to go for it, and then I got stopped out. I was also long a dollar CAD, if you remember, from 126, and I was looking for 127.50. What happened is I moved my stop loss higher, and I eventually got stopped out as the price reversed. So I got stopped out with a profit, so because the stop was above entry. I did not get my ultimate limit order at 127.50, but happy with the trade. Okay, moved on. I was also short Nasdaq, if you remember, from 14,466. And I was looking for more downside, which eventually happened later on in the afternoon or evening, but that reversal, basically a retest to the upside, and I decided to get out shortly after US opened at 14,300. So it wasn't the ultimate or the best trade, but yet again, that's what I got in. And the other trade that I initiated from mid-afternoon yesterday was short S&P from 44.05, and I had my limit order at 43.05, which was hit, and I got out of that trade. So people who were watching the TraderCast broadcast knew the reasons why I decided to get on this trade. This was basically a continuation pattern called rising wedge, loss of support, and then retest of that support, and I was looking for a specific candlestick pattern to form at or around that level to get in, and I got it, and that played out really well. So these are my trades. Now let me just very quickly talk to you about what's going on. We are seeing a little bit of volatility now kick in. This is due to the economic data release, which came out just a few minutes ago, and that's triggering PCE in US and personal income spending, that kind of stuff. So numbers were, as far as I can see, good, and that triggered, yeah, that triggered a move higher. Now I have my news feed switched off at this moment because I'm talking to you, so I'll go through this very quickly. So a couple of things that I'm looking at the moment. I am looking at long FTSE, and this is a trade that I did just now. So in my book, FTSE is uptrending. You can see that these charts are very plain. There is no indicators like moving averages or oscillators at the bottom or anything. So it's just basic horizontals and maybe a few lines. I was looking for a pullback and then a spike higher. I was looking for a pullback in this zone here, about 74.20, 74.30, from this swing low here to this swing high. This is my full 61.8 fib retracement. So this looks like a good entry for me. This is the 4-hourly time frame. This is the hourly time frame. Inside bar is being formed. We still have about 20 minutes for this candle to form. But if I go to a 15-minute, for those of you who went through the courses, or for those of you who watched TraderCast broadcasts, you know that I tend to react to this type of setup a lot. I react to this, but I also react to this a lot. This is called Morning Star Reversal. It's a 3-candle shape, red selling pressure, indecision, dodgy, or a spinning bottom or spinning top, followed by a green candle, which is at least 50% of the trading range of this green red candle prior, and they have to have the tendency to create an oversold bounce back. Now this is also 1, 2, 3 red candles. So for those of you who watched this before, you know I like 3, 5, 8. And yet again, some of you who are brand new are saying, oh, what are you on about 3, 5, 8, and what about morning star, evening star, and what is all of that? It's just a simple terminology. Once you get used to it, you'll figure it out. It's not complicated. You can check it out. Go to my trading skills. There's some free courses on candlestick patterns. There's some free courses on fibs and that kind of stuff. So check it out, you know. And then if you still need help with more, let me know. So basically, this is a full fib retracement, corrective pullback of this impulsive move higher, and this is the retracement. So I've decided to get in and hope for the best. So I'm in this trade at the moment, and I'll show you that trade straight away. So if I just peel the chart off, so where is my chart? Just bear with me a second. I just need to open it in a new window. So it takes a bit of fidgeting to move these charts across, because they don't come in the same ratio as the one that I'm using for a broadcasting. So they're all kind of skewed. But that's where I am with FTSE. I've decided to get in. You can see pullback, reversal, retest, and a push higher. I'm currently long. My stop is about 30 points below, so what I'll do is I'll move the stop loss slightly higher. I'll move the stop loss about 10 points on this trade, so I'm risking about 100 euros on this trade, and my ultimate take profit area is up here at the cluster of these previous highs, resistance at 75, 85, or 7,600 would be even better, which is a round number, and so on. But in all honesty, I will likely look to take some partial profits. And what I mean by that, some of you are confused. Why would you do that? Well, you want to pay yourself something. And I will likely move the stop loss at break even and above break even to protect myself. And then when the price comes to these areas, So this swing high here from 26th of January, this swing high here, and then these swing lows around 7,500, nice and round number, 7,515 or 20, I would likely take half of my position off and move the stop loss higher. So take some money off the table and let the rest run. So that's how I would normally approach this type of setup. So that's where I am with FTSE, happy with this, holding this open. The other thing that I have open right now, and I did the same thing just before the open, this was the reaction to that economic data release that we've had. This is S&P in the daily time frame. You're seeing a buying pressure, buying pressure, buying pressure wicks, but the overall trend is to the downside. Shorter term, medium to shorter term trend. So all of this appears to be forming a consolidation pattern, and there is an energy buildup. This is energy buildup, energy buildup. Bulls are pushing the price higher, unable to break. Bears coming, shorting. Bears are losing faith, cashing in their shorts. Bulls are coming in, buying, and so on. So bulls and bears are exchanging their trades. Nobody's winning. Price is going sideways in this coiling pattern, and this normally precedes explosive reaction. Okay, so the explosive reaction to the upside would require a push and a breakout above 44.12. If you remember, I was short S&P yesterday from 44.05, so that was the resistance yesterday. So a logical level. If anybody's long, this is where they are looking to take profit. When they're taking profit, they have to sell. When they're selling, they're creating a red candle, and then the price dips a bit. And then that incentivizes other people to do the same, or bearish traders to come in and say, this is the confirmation I was looking for, and I look to short. So that's how it works. It's fairly straightforward. Now, if I see a push higher and a breakout above 44.12 and end of day close, that could possibly open the way for a push higher towards 44.80, 45.20, possibly even higher. Alternatively, loss of these lows at 42.70 would negate this setup and change it. I've traded in a much shorter term time frame. This is the hourly and this is the 15-minute. So you're seeing 1, 2, 3 red candles followed by a buying pressure at the bottom. Basically, this is called a narrow bar range, or a smaller trading range comparing to 2 previous candles. This tells me that sellers are getting exhausted, and it's happening at the support, and it's triggered by a good, better than expected or good economic data number, and that triggers this buying pressure to the upside. So I've decided to get in and get on this trade. Now let me just show you where I am with that at the moment. I'll just open it here. Let me just resize it. So here we go. There is the trade. What I did is I decided to go in through the push, and what I'll do right now is I'll move the stop loss closer, and I'll take some of these positions straight away, because this is a scalp. I'm going to take 25 out of this trade, pay myself a little bit, and wait to see if I get a push higher. The reason why I did it is because the price came close to these previous lows here, so I can draw a line connecting these higher lows, and also there is a horizontal here, and also there is a falling resistance trend line. So this here, what you're seeing is a little bit of profit taking at the moment. Let's see if this settles, and then if it goes through that level, I would likely look to move my stop loss closer to entry, and then at entry, and then let it run towards these kind of swing highs at 44 even, or 44.12 or thereabout. The ultimate limit order on this trade is up here, 44.20. All ties in with what I was showing you just a few minutes ago on the normal vanilla chart, and let's see if that materializes. Now there's a few other things that I'm looking at the moment. I was telling you about WTI crude. Now what I'm looking for in a crude is this. Okay, crude is uptrending quite nicely. We have rising trend line here. We had a consolidation, breakout, consolidation, shorter lived consolidation and a breakout. So I was long from lower levels. Now what I'm looking for is I'm looking for a retracement to happen. Now some people are saying, well, you're going to short now. No, I can't short. If I'm shorting, I'm going against the trend, and I'm already against the trend in FTSE and also in S&P. So I don't want to have another counter trend trade. I'm looking for a trend following trade. I'm looking for a price action which will enable me to get in and trade with the people who are more dominant rather than against them. So what I'm looking for is I'm looking for a reversal and pullback to 84.50 or thereabouts. So basically a pullback to this rising trend line level, and that's what I would like to get in if that happens. And then if that happens, I would be looking for a reversal, or like this, or like this, or like this, in here for a push higher. That's what I would be looking for. So in that case, I would put my stop down 82. So this was the stop from before, about 83.20, 82.50, around there. So the amount of risk would be this much. And then depending how I get in and where I get filled, I would be looking for this much of reward. So we have multiple levels, kind of quantities of risk for the disproportionate amount of potential return on this trade. So that's where I am. If the price breaks above 88.50, 89, I would have to walk away and look for a breakout and a retest for something to happen. But that's where I am with WTI crude. So I have an order. If you remember, those of you who watched these sessions before, you know that I was filled on a limit order with my last WTI crude trade as well. Now, just to make sure that we are all okay here, let me see, is there anything in the community that needs to be checked? No, that's all fine. An order. I have an order. Okay, so that's fine. If you have any questions, feel free ask. Okay. So the other thing that I'm looking for from today's point of view, we have dollar card. Dollar card is of interest as well. The same level as before, 126.60. So what I got out, I would like to get in again if I get there. So this is the reason why. So what I'm looking for is some sort of corrective pullback like that, and then a rally from there. So something like that, pullback and a rally. A couple of trend lines here. This is the big one. This is the first one. For those of you who don't know what I'm doing, this is basically a line that indicates the existence of the current prevailing trend. And the basic premise is that you want to trade with the trend rather than against it. So you're waiting for a corrective pullback to trend and then look to buy and trade with the direction within the trend or in a direction of this prevailing trend. But the angle of this trend line is quite steep. So the steeper the trend lines, the more likely it is that they might break. And then when they break, the price goes to the next level of interest. And that next level of interest is another trend line. So in this case has a gentler slope. And then we also have a level which was tested in the past. Breakout, resistance, breakout, retest, breakout, retest, breakout, retest. So if the price does go, if we see a loss of this trend line and a gradual pullback lower to here, that's where other bullish traders would likely be looking to engage for a rally higher. So that's the basic premise. And if that happens, I would likely put my stop at where am I now? 126, which is there. So that would be the amount of risk. And if that's the case and I get filled, I would like to potentially take profit towards these swing highs 127.90, 128 to the upside. So that's the basic premise for dollar CAD. This is working with the assumption that US dollar will be stronger and more bullish than Canadian dollar, and there are many reasons why. For those of you who watched a live session prior to Federal Reserve interest rate decision, you know the reason why that's the case. So this is the fundamental reason, not just the technical level, but fundamental reason, which is supported by economic data for that current continuous US dollar strength, which could persist for the rest of 2022. Now, just realized the time. It was lovely talking to you all. I am going to stop the broadcast right now, and I'm going to TraderCast and start the normal afternoon session. So stay safe, happy trading, enjoy your weekend. It's Friday. If you've traded, make sure you take some money out of your trading account and pay yourself something, give yourself a pat on the back for doing well. And if it didn't work out that well for you, that's okay. Don't worry, don't stress, don't chase the trade, don't revenge trade, sleep it off, reassess everything, go and look at the market with a fresh pair of eyes, and then decide if you want to re-engage when the market comes to your level, when the market comes to your chosen condition level, and it gives you the confirmation to get in. So that's where we are. Stay safe, happy trading, and I'll speak to you all next week. I believe I'll probably post the week ahead market outlook as well. I'll do that. It's basically a short video which will talk about the key economic data which are coming in next week and what to look for, and also some key trading levels for euro dollar, sterling dollar, dollar yen, definitely gold, crude oil, Bitcoin, Nasdaq, and DAX, or maybe FTSE. So I'll do that over the weekend. I'll post it on YouTube. Check it out. If you're subscribed, you'll get a notification. Okay, so thank you for watching. Stay safe, happy trading, and bye for now.